All right, now I'm going to do a quick video on China. I believe China benefited greatly from globalism, which was the sucking of all wealth from Western civilizations, United States of America in particular. And once the borders were open to free trade, they pre-set in disadvantages for the wealthy countries, and they put in advantages for the emerging market countries like China, Brazil, India, all those countries right now that are kind of collapsing because the dollar, interest rates are going up, and they have borrowed in dollar terms to try to get some more security in their debt. And now it's starting to blow up in their face as the Federal Reserve raises interest rates. But the Federal Reserve is raising interest rates in ways to try to stabilize multiple markets, and they don't realize that by doing so, they're just going to destroy any economic growth that the Trump administration has started to create, because the rest of the world is going to collapse. And since we trade with the rest of the world in a currently globalist society, we will also go down with them until everybody crashes, and then the infrastructure that Trump has created through his policies takes over, and we become our own individual economy again, growing at our own pace, on our own time, at our own production rate, where we don't have to depend on the rest of the world. And we've currently done so with our energy independence, according to President Trump, which I actually believe he has done by doing the tax cuts and approving the pipelines that many of the presidents in the past couldn't decide on and couldn't really make a decision on how to complete and actually take action on it. He's done so. So the pipeline infrastructure is coming in from Keystone and Dakota, and the rigs have come back due to trade wars that have been created by his tariffs and his tax incentives. So we have the production going. All we're waiting for now is the spike in price, which since most of the countries around the world are moving away from the petrodollar and they're starting to go to the petro yuan, it's going to be kind of hard to see prices in dollar terms rise unless Saudi Arabia, for some reason, cuts oil production. This is where this journalist Khashoggi, who got murdered in a Saudi consulate in Turkey, comes into play, because then the United States said that they would punish whoever murdered him, and the Saudis have already vowed to retaliate from any kind of punishment. So most likely they would go to the old OPEC playbook and they would cut production, which technically they don't have anyway, because the Saudi wells have been bringing up water for a long time. That's why Saudi Arabia and many of the United Arab Emirate countries have had to go from being oil-producing countries to tourism and financial centers in order to diversify their economies out of oil. So cutting production really, I don't think, will have any effect other than a psychological one. By telling people you're going to cut oil production, it automatically makes them worried, because you're appealing to their fear and their greed, and makes them make investments and speculation and money transfers that affect the price of oil, even though in reality nothing's really going to change because the production's not there. So even if they cut it, they're cutting it to nothing because it's nothing there in the first place. That's why Saudi Arabia has started creating this technology center, this city called Neom, where they have the first artificial intelligence cyborg type robot as the first robotic citizen of this city in Saudi Arabia. So they're trying to diversify into technology and a financial center. You've seen that with places like Dubai, where they're building resorts on artificial islands that they've created. And when the economies of the world collapse, those places collapse too. So but they're trying to set it up so they have the infrastructure to rebound faster. And so that's why I feel that oil can be used as a tool, but also when we're looking at in terms of China, China has already won the trade war because of the trade agreements we've had and because of globalism. It's already been baked into the cake that we lost. The United States lost. So when Trump puts out these tariffs and the media keeps saying, "Oh, look, he's crashing the economy because of his tariffs on, and this is no way to trade with the world, is to cut them off and isolate your country." Well, I mean, we've already been isolated, you dummies. Already lost. The only way to go now is up. So we can spank the Chinese pretty badly because they own a lot of treasuries. You know, they could sell treasuries. But what do people do when China starts to collapse? Because we've been able to hurt their economy so badly that their stock market corrected 30%. What do people do when the rest of the world starts to collapse as a result? Because you can see when China's markets crash, all of Southeast Asia crashes along with it. And then when Southeast Asia crashes, you get Australia, who's connected to Southeast Asia as one of the few white colonies near Indonesia, Thailand, you know, Australia and New Zealand, who have the Union Jack, which is connected to the UK. Well, then the UK starts to collapse. And when the UK starts to collapse, then you get the rest of Europe, which is the European Union. It starts to collapse. And when the European Union starts to collapse, then it bleeds through to all the trading partners of Russia, Turkey, and the Middle East. And then it eventually comes back to the United States. I mean, it all bleeds back to the United States. Because globalism has now connected everyone. And this is why we're at a point now where all markets are saturated, because in the beginning, they cut interest rates and allowed money to flow out of the United States. And so the Fed started to watch the euro-dollar market, which is the dollar value and the dollar investments that have flowed out of the U.S. Then the Fed also watches the dollar that is within the United States. And they try to balance the two markets when they're completely separate from each other, and they're trying to use one interest rate, their Fed funds rate, to control all these different rates that are going on, and it's not working well. That's why. So now all the dollars that have flowed out into the world have also oversaturated the world like a sponge. You know, if you keep pouring water into it, it becomes oversaturated, and at some point the water starts to flow out of the sponge. And it can flow back into the source too. So the United States has had the cash flow back in also. And so everything is inflated. All assets are inflated. Traditionally, in investment theory, you have inverse relations, which means when one thing goes up, another thing goes down. But now all markets are positively correlated. There's no more inverse relation, except for newer markets like the cryptocurrency markets, and what most people would consider antiquated markets, which are gold and silver, precious metal markets, because precious metals represent the old money and cryptocurrencies represent the new money. So you may get some inverse relationship to the rest of the economies, the rest of the markets. And as a result, you get some diversification still left, and you may get some flight to safety into those things due to the fact that everything else is correlated now. Bonds are correlated with stocks, which are correlated with real estate, which are correlated with insurance products, which are correlated in many commodities and you've got money flowing everywhere. So, that's how I believe we're going to still win against China. China can end all this, or they can start a major crash if they continue to be, stingy about their trade policies. They continue to manipulate their currency. They continue to, find ways to subsidize industries and not pay their employees what the United States pays our employees, so that they can make things way cheaper. There's a lot of manipulation that goes on in China at the expense of their own people. And as long as their people are fed and aren't hungry, their people don't revolt. But if you go into an economic crash, the Chinese government, they're the communist government that is so terrified of their people, will be overrun by their people. And we saw this back in the Tiananmen Square days, where you had the lineup of tanks, and you had one student stand in front of the tanks, and the tanks couldn't do anything. It's basically to show that with all the might and iron and weaponry that China likes to, display and brandish to the rest of the world, they really have no power when it comes to the average citizen. And the only thing they can do is control their perception of power. And by controlling that perception, then they can have people in line. And it's kind of what the Federal Reserve does and how they manage markets. Really, raising interest rates and lowering interest rates doesn't do much to affect the economy. Well, what it does do is it affects the perceptions of people and makes them either think positively and therefore spend money by investing it into certain assets or speculating in certain assets, or it makes them feel negative and scared, which case they stop, they pull money from it, or keep their money on hold for a better day. And so the management of perspectives, which is one of the policies of the Fed, management of perspective economics, is coming back to bite the Federal Reserve. So really, we're in a global central banking system. So when Donald Trump blames the Fed for why stock market starts to crash, he's not lying. When Obama likes to take credit for why his economy was so great, that was political too. You got a lot of socialists in the central banking system because they want everyone to be taxed and to share their wealth. That's why when the banks were going under, they bailed out the banks by taking taxpayer funds. They socialized the problem. The banks decided to do evil things, so the banks should have suffered independently. Instead, the banks spread the suffering to everybody else by taking tax dollars and doing TARP and TAMP and all these other programs to confuse everyone as to how they're stealing from them. So the reality of it is, at this point, everything's set to come down. Is it going to come down fast? I don't think so. What's different from 2008 is the banks have learned to automate payments. So it's harder to default. When you do things, they take your credit card number or they take your bank account number so that you can do a recurring payment on your utilities, on your bank accounts, on your insurance, on anything else. As opposed to in 2008, it was easy to stop paying on things and you could default. Through automated payments and automated renewals, you're not going to see a crash as fast. Also, there's news on the Fair Isaacs Corporation is going to increase everyone's FICO score for borrowing. Doesn't matter if you screwed up on your credit. They're going to start looking at your bank account and how you manage your bank account. So they're going to give you a new ultra FICO score, which should raise you up to a lendable level. So now you could get a subprime loan or a higher loan, whereas before you wouldn't have even qualified. And they're starting to loosen restrictions again, just like in 2007, where they're doing the ninja loans, no income, no job loans. They're starting to do subprime again, and they're creating more mortgage-backed securities. So that takes time to build that infrastructure, and that takes time to open up new markets. So I don't see the markets crashing yet. I see them doing further expansion. You're going to get more water into they're forcing water into the sponge. And that sponge it can expand still. It's almost like when you force air into a balloon, it expands. And that's why they call them bubbles, because it's a similar concept. They're creating bubbles by forcing funds into there or flow into that. And eventually you need to keep your eyes open for something that pricks that bubble. So this is why my strategy has always been about finding the proper time to short. If you short now, you're going to get so screwed by your short position that it's going to cost you money. And so I find ways to short now, but at the same time, I'm going long the market so that when the market goes up, I make money. But I'm still positioned in a short position, so I have that insurance so that if the markets crash, I'm covered. I can capitalize, make a lot of money off of that crash because the markets take elevators down. And so you want to be able to be short-term long so that when the markets rally, you can unwind that short-term trade. You're not going to stay in it for a long time because you don't expect the markets to go up forever anymore, especially, but you still want to be exposed to upward price profitability, but you also want to be long-term short, long-term short, so that, because in the long run, the markets are going to drop. Now, those long and short terms are probably confusing the hell out of you, especially when I'm talking about time frames, long and short time frames. So that's okay. I'm not giving investment advice. I'm giving you ideas so that you can start investing in your own education and learning about these things that I've learned about so that you can utilize them to protect yourself and take responsibility for yourself. That way you can't sue me. You have no claim. Whether you make money or lose money, that's on you. And I appreciate your support, and hopefully I'm making things clearer for some of you who feel scared and confused. Don't be afraid. Be educated so that you know how to maneuver these markets. Be like the wealthy. Be crafty. Don't be like the poor who are stupid and ignorant and they don't want to bother learning. They're like, I don't know anything about that. And I can't afford to go to college to learn my finance. Trust me, in college you don't learn this stuff. They're going to teach you traditional economic theory as opposed to actual real-time economic practice. They don't teach you practice in school.